Well, in this morning's Economic 360, sometimes the market is up, sometimes the market is down. But one thing that is certain is the market is always moving. U.S. Bank Vice President and Senior Portfolio Manager Mike Dennemann joins Business Courier publisher Jamie Smith in the studio to talk about the recent volatility in the market and what it means for stocks. Jamie and Mike.
Thanks, Peg. Thanks for being here today, Mike.
Good morning.
So it's been a wild ride on the market lately.
Yeah.
What's going on?
Yeah. So, we finished last year on a high note, another good year for the market, and so far this year has been something of a mixed bag. But regardless of the direction, the sense seems to be that the volatility has increased. And so just to take a step back, when we say volatility, what we mean is the movement of the market in any given period of time. So the difference between those highs and those lows. So certainly the sense is that the volatility has increased, that we're not on this smooth trend, but rather there's a lot of uneven choppiness out there. So if the casual observer perceives that there's a lot more of this volatility, the question is, does that perception match the reality? And if it does, what does that mean for the market?
Yeah. So you're saying perception, you're saying reality. How do we really tell if the volatility is as high as they're saying it is?
Sure. So, first of all, there's kind of what we call the eyeball test. I mean, look at just the fourth quarter, for an example. We lost 10% in October, almost right off the bat, but then gained all of that back and then some in just a few short weeks. So those are some pretty wide moves in just a short period of time. And then even on a day-to-day basis, we're seeing this. This past Tuesday was a great example. The Dow started up in the morning about 300 points. By early afternoon, it was down 200 points, and then it finished about even. So even within a single day, we're seeing some very wide swings. We've hardly had a day this year that hasn't had a 100-point move one way or the other. So to answer your specific question, believe it or not, there's an index out there. It's called the VIX, V-I-X, that puts a numerical value to the market volatility. Right now, that measure is at 23, which, to be clear, isn't even close to an all-time high.
Okay.
But when you put that in context of where it was, say, just 6 months ago, in July it was at 10, today it's at 23. So in just a 6-month period, that's indicating that it's almost doubled. So yeah, the perception is reality. Certainly by statistical measurements, the volatility has increased.
Okay. So what does that mean, to the market? I mean, what's this mean to us?
Right. Well, unfortunately, it's not possible to discern right now what this means for the future direction of the market, but what it does tell us is that there is an awful lot of uneasiness out there right now, a lot of concerns and worries about the market. Things we've talked about on this program a number of times, be it the Fed and interest rates, whether it's the price of oil or what's going on overseas. There's not this sense that, hey, we're in this trend, upward or downward, but on a day-to-day basis, the different news items are driving the market one way or the other. So until we get some sense that a lot of these questions are cleared up, I think we can expect to continue to see these wide swings.
Okay, so I should keep working and spending and throwing everything into the market I can, huh?
Buy low and sell high.
All right, well, thanks for being here today. We always look forward to you being in here and talking about the economy, so thanks a lot.
Thanks.
All right.